Hello friends, we'll be discussing an illustration which will be related to issue of shares for consideration other than cash. Now, when we speak about issue of shares for consideration other than cash, we basically understand that these details, or rather such issues, are made for any kind of asset procurement, any kind of promoter being a part of a question, or rather whenever a promoter promotes our company and whenever we have to provide for such services provided by some service provider. Instead of paying them cash, we provide them some shares, which is hence known as issue of shares for consideration other than cash. Now, in this illustration, we'll be understanding how a promoter can be dealt with by issuing certain shares like this. Instead, whatever services are being provided by them, will use those services itself and will provide them shares instead of providing cash to them. So let's figure out with the illustration that will be jotted down here. Let's start with the illustration now. Now, the question states about a limited company who was provided with an authorized capital of 1,50,000 rupees, which was divided into 15,000 shares of rupees 10 each. That means the number of shares that the company had was around 15,000 shares, and the total value of that shares was somewhere around 1,50,000. That means per share value was somewhere around rupees 10. This is the information that has been provided here. Let's figure out what other details will be provided in this question. Now, the company has done certain transactions during the year, and two certain transactions have been mentioned here. Now, the first transaction refers to the company provided somewhere around 1,000 shares to its promoters. 1,000 number of shares were provided to its promoters, and the second transaction that the company did is that the company provided somewhere around 2,000 number of shares to Y Limited Company, from whom they purchased a machinery for 25,000 rupees, and in full settlement of the amount after discounts, they paid up somewhere around 2,000 shares of rupees 10 each. These are the two specific transactions which has been mentioned here. Now, let's figure out other details of this question. The company has also mentioned that the balance shares that were there, the company issued them at, or rather for public subscription. That means whatever balance shares were there after giving to promoters and after giving to Y Limited Company, whatever balance shares were there, they sent it out for public subscription. All the shares were fully subscribed and paid for, and however, the distinguished, or rather the fractions in which rupees 10 was divided, like application rupees 2, allotment rupees 4, and first or final call rupees 4, was mentioned here. All such shares were subscribed for and were paid for. You are supposed to prepare the journal entries here. You're supposed to prepare the share capital account, bank account, and the balance sheet. So these are the four requirements that you're supposed to prepare. Now that we're going to start with the journal entries first of all, let's prepare the format and then start up with the journal entries first. Now, the first entry that will be starting off is the entry that will be related to promoters entry. That means something that we're giving off to promoters, and then it will be followed by the entry that will be related to purchase of machinery, and then the rest public subscription. So let's start with the promoters entry first. Now, whenever we are giving something to the promoters, promoters are basically those people who ensure that our goodwill of the company increases, or rather, they are working on the goodwill of the company itself. So, we have certain promoters, we have given them somewhere around 1,000 shares of rupees 10 each. That means we have given them 10,000 rupees for the services they have provided here. That means they've increased the goodwill, or rather, this is an goodwill expenditure. So, this will be a part of goodwill itself. So the expense that we have considered here will be goodwill, and that we are giving them something related to share applications or other equity shares of our company. Hence, the entry will be goodwill account debit to share capital account. That will be the entry that will be providing here. So the first entry we have passed here, that is goodwill account debit to share capital account. Amount has been mentioned as 10,000, 1,000 rupees multiplied by 10. That gives you being the amount provided to the promoters. This is the first entry that we have passed. The next entry refers to the machinery that we have purchased from Y Limited company. So that has to be taken care, or rather that has to be incorporated into this. So the first thing that we'll be mentioning here is the asset that we are procuring. So let's mention that first. Now, the asset ideally costed us for somewhere around 25,000, but we have paid in full settlement of what? That will be a total of 5,000 discounted amount. That means 20,000 we have provided to them. That means the share capital that has gone on, or rather the share capital that has went off, is somewhere around what? That will be a total of 5,000 subtracted from the total cost of the machinery. That will be 20,000. So let's mention that here. So the share capital, or rather the entry that we have passed here, is machinery account debit with the original cost of the machine, that is 25,000. So man, on the credit side, we've mentioned share capital account with 2,000 into 10, that is being the share capital that has gone off, and the discount that we have received here, which is an income for us, or notional income basically, hence it has been mentioned on the credit side. Now, the next will refer to the entries when the public subscription comes into the picture. So let's start with that. Also, to provide you a gesture, or rather certain details about these two entries that we have passed, these are the clubbed entries that we have passed here. The reason why I've passed club entries is so that you can understand how the short form of entries can be mentioned. Ideally, the machine that has been purchased, it has been purchased from Y Limited company. So the entry will be machine account debited to Y Limited company, and then the next entry will come as issuing of shares, and then everything will come into picture. But right now, we're not in the scenario where we have to provide entire or in-depth details of this, because we already know about all these details, and hence we are going to provide you with the techniques, or rather terms, which can be utilized in your CPT exams, or rather MCQs exams. So these are the details that you have to look forward for. Now, the next entry that will be passing is receipt of application money which was sent out for public shares. Now, 15,000 shares that we had, out of which 1,000 went to promoters, 2,000 went to Y Limited company. So the balance that is left after 15,000, 3,000 being deducted from them, 12,000 shares were issued to public, which were fully subscribed for and were paid up for. So we'll pass each stage entry. That means first, receipt of application money. So an application was supposed to receive somewhere around 2 rupees per share. 12,000 multiplied by 2 will give an amount of 24,000 that will be mentioned here. The next entry will refer to whatever application money we have received, we have to transfer it to share capital. So let's transfer that. Now, with these entries being passed here, the next entry that we have to pass, or rather prepare, refers to the allotment due and allotment receipt. So let's start with that entry now. So the entry that we're going to pass right now is allotment due entry. An allotment was supposed to take around 4 rupees per share. That means 12,000 multiplied by 4 rupees. Now, the next entry will be receipt of such application money. So the next entry that we have passed here is receipt of allotment money. That means bank account debit to equity share allotment account credit side. Total amount of 48,000 has been mentioned. As there are no calls in arrears, no calls in advance, no pro rata, no over subscription, no under subscription, hence no cases of any other complex entry being a part of this illustration. The last entry, or rather the second last entry that we have to pass here is, or rather is referred as first and final call due. Again, on that means whatever equity share final call is due, that is 12,000 multiplied by 4 rupees will give you a total amount of 48,000, which is supposed to be expected. Hence, that has been mentioned here. Now, the next category will refer to receipt of such final call money. So the last entry that we have mentioned here is receipt of final call money, which has been mentioned here. Now, the next part that we have to take into consideration, or rather the next details that we have to take into consideration, is that the journal entries have been completely done. It's the ledger account that we have to prepare, post which we have to go and prepare the balance sheet in detail. Now, let's prepare the details of the ledger account, which we have to prepare in this illustration. So the two ledger accounts that we have to prepare here is the share capital account and the bank account. So the first that we are preparing is share capital account. Let's start with that. So the first entry that we had is goodwill account debit to share capital. So that will be again a part of share capital here. Hence on the credit side of share capital, it will be by goodwill account with the relevant amount related to it. So the entry that has been mentioned here is by goodwill account, the amount related to it was 10,000, which has been mentioned. Now, the next will refer to asset being purchased, and that, or rather for that specific asset, we are being provided with capital account, or rather shares are being issued to that. Hence, here on the credit side as well, we'll have by machinery account or by asset account. So machinery account has been also mentioned with the capital amount being transferred for that thing. Hence, that is being mentioned on the credit side here. Now, the next will be receipt of application money, and application money being transferred to share capital. Hence, the entry was when the transfer happened from application to share capital, it was application to share capital account credit. Hence, on the credit side of share capital, it will be by application or equity share application account. Now, after the application money has been mentioned on the credit side of capital, it will be allotment and final call, which is supposed to be mentioned. So let's mention that. Both allotment and final call amounted to 48,000 each. Hence, we'll be mentioning it directly here. So we mentioned all the entries that were supposed to be a part of this. Now share capital account has been finally completed. Let's tally the balance and figure out how much is the balance on the debit side here, because clearly on the debit side there is no entry, hence the balance is supposed to be mentioned on the debit side. So the total of share capital balance is 1,50,000. Now this balance will be moved to the balance sheet. Next account that we are preparing here is the bank account. Now, when the bank account comes into the question, or rather anything related to that, make sure that we are not issued for the first two entries cash here. Now, cash or rather bank related entries only come into the question when application money has been received, and allotment money has been received, and when final call money has been received. So only that amount will be mentioned here. So let's mention that thing here. So equity share application 24,000 has been mentioned. The next will be equity share allotment. So these are the only entries that are related to the bank account. Hence, we'll total this bank, or rather total this bank account then, and then figure out how much is the balance that has to be mentioned on the credit side. Now, that will be moved to the asset side of the balance sheet. So let's start with that. So the total of the bank value comes to 1,20,000. Now that we have all the details here, now we'll prepare the balance sheet first. Now, the first item that we'll be mentioning here is the share capital balance. As the authorized capital has been mentioned in the question, hence it is a part of this balance sheet. However, that total is not supposed to be incorporated in the balance sheet total here. It is just for additional information. marking it as star point. Now the next item that we'll be mentioning is the equity share capital. So the total of equity share capital what we had was 1,50,000, which has been mentioned here. The next item that we'll be mentioning is on the asset side, non-current assets and current assets. So in the non-current asset, the first thing that will be passing out is the tangible asset entry, that is machinery. So the final cost of the machinery that we had was somewhere around 20,000 because 5,000 was the discount provided. Now the next will be, or rather the next category will be non-tangible asset, which will be goodwill here. Again, the goodwill was the promoter's balance that we have given to them, that is 10,000 rupees. Now, after non-tangible, tangible, or rather non-current assets have been completely done, now it's time to mention the current assets, which will be only one thing, that is bank account or cash and cash equivalent. So the total has been mentioned here. Now every other thing that we had in the journal entries has been posted in the balance sheet. Now it's time to figure out if the balance sheet total is equivalent. That means liability total is equivalent to asset total or not. Let's start with that. So these details have been mentioned here. That is 1,50,000 has been completely mentioned. So the balance sheet is closed. So this is how we prepare the details related to the issue of shares for consideration other than cash. I hope this video has given you a lot of clarity about it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.